Good morning, everyone. Steve Murray with Insurance Agency Marketing Services. So today's webinar, we're going to talk about the DOL and how it affects insurance producers. We've been insurance-only producers. We've been getting a lot of calls here last day or two since the enactment of the rule, and just, what do I have to do and how does that work? So I wanted to take just a few minutes here this morning and kind of go over what an insurance-only producer needs to do to go ahead and cover their bases. I do want to start off and let everybody know, of course, the information in this presentation includes our opinions and interpretations and understandings, and is not meant to be legal advice, but rather give you some guidance and leadership. Okay, so what does it all mean? Effectively, what it means is that June 9th, from that day forward, if you're dealing with qualified funds, you are a fiduciary. So whenever you work with qualified funds, you're a fiduciary. That means that you're subject to impartial conduct standards, that you have to disclose those duties to your client, that you need to disclose your compensation and incentives to your client, and you need to complete and maintain the documents that show how you went about doing those things for a total of 6 years. So what does that mean, impartial conduct standards? That's kind of a phrase that's been thrown around quite a bit. What that means effectively is that you will make no misleading statements to your client, that you're going to provide advice in the client's best interest, and that you're going to charge your client only reasonable compensation for that advice. So most of you are going to operate in the insurance-only arena under the exemption PT 8424. PT 8424, what does that mean? Again, you're adhering to those impartial conduct standards, that you are responsible for maintaining your fiduciary documentation, that you are effectively supervising yourself, that you're holding yourself to those standards, and of course, in the end, that the liability for maintaining adherence to those standards and for maintaining those records is at your doorstep. Doesn't fall with the company, doesn't fall with a bank, doesn't fall with anyone but the insurance producer. So when does it mean it? Basically, it means anytime you're offering, right now under the current rule, anytime that you're offering advice regarding qualified funds, and of course that you're not employed by a bank or supervised by any financial institution. Should that change, should you decide to become securities licensed, should you go to work at a bank, then they become your financial institution, and then you'll need to look to them for guidance. If you're already in that position, you've probably already been offered guidance. The folks that are on with us today are going to be folks that are probably not in that position and are insurance-only producers. So we've got a really good document that was actually put out by North American that kind of describes over 8 pages the duties of a fiduciary, and kind of talks about the difference between a fiduciary and how you've operated maybe in the suitability world prior to the DOL implementation on the end of day June 9th. So this is a nice document. I would recommend, I'll make it available after the webinar here. I'd recommend that you take a few minutes and look that over. You can see down at the bottom where they show that little key takeaway. Each page has 1 or 2 of those points on it, and pretty valuable and well thought out and really well designed to help anyone understand the position that you hold now as a fiduciary when you are working with qualified funds. What that also means is that many of the companies they should have already contacted you or will contact you and say, okay, either by contract now, by the very fact that you're licensed with us, you have to admit or acknowledge your standing as a fiduciary and your understanding of what that means. And some of them have set up little websites, kind of like what I'm going to make available to you, that walks you through what that really means and gives you a little leadership and guidance. Again, the liability is yours, not the company's, but they are stepping in to handle some of the prep work. Some will, like this form from Equitrust, anytime that you work with qualified funds, they're going to ask you to complete and return this form with that application. And you can see on this app, basically it says, hey, how are you acting? Are you going under BICE or 8424? For the insurance-only producer, that would be 8424 most likely. If it's BICE for some reason, if you work as a registered rep, you're operating under the BICE standard, then you would have to, down below there, complete the information of the financial institution that's going to hold that or share that fiduciary responsibility with you. So you think that's either been acknowledged by the fact that you're still appointed with a company, or they may have sent you an amendment to a contract, or in the case of Equitrust, they may ask you to complete this form with each application for qualified funds. My guess is that you'll find this anytime that you put in and request information now from Equitrust, this form will automatically spit out with any of the other documents that you would get with an application for qualified funds. And then the thing that you probably have seen most on is this 8424 disclosure. And again, this is a disclosure that and I want to say across the board, I'm trying to think of any company right now, and I won't swear by it, but I don't know that I know of any of our main carriers that is actually requiring this form to be sent back to them. Rather, this form is designed for your files and to basically go over with the client, and basically you're disclosing your duties, you're disclosing your compensation, kind of going through what a material conflict of interest is, and also talk a little bit about how you come upon your product recommendation. So this would be a form that you could, for instance, I can make this sample available to you. You've received samples from all the carriers that you do business with by this time, most likely. But this is a form that you would need to put together for your use, primarily to be kept in your file, and it is, again, for your protection. And if you want that form, I can make it available to you so that you have kind of a template of something that you could use. This is kind of a nice piece. It was put out by another of our carriers. This one actually came from Athene, and this is the best interest determination worksheet is kind of how they title it, but really it is kind of helping you understand, okay, this is the process that I went through when I talked to my clients. So it kind of describes how you arrived at your recommendation of an indexed annuity or a fixed annuity. It then goes on to go through some of the processes that you went to in picking the right product. And again, this is meant to be kept for you in your file. It doesn't require anyone's signature, although if I were you, I would sign it. You could certainly have the client sign it. But again, this should go in your file, and it's meant for your protection. So a form like this, or something you put together on your own, or even a level of records in your file that shows that you went through this process, is going to be part of the protection that you need to keep in your file for that 6-year time frame. And so one of the things that you're doing is you are in that file, in that particular form, whatever form that you put together for the 8424 disclosure, you'll notice here where here it has that you're paid reasonable compensation for the sale, and in this case, it lists that reasonable compensation. I would make your form so that you can type in that reasonable compensation depending on what type of product that you're offering, and then that's disclosure to the client, and you'll have that in your file. So now you've disclosed to your client that you're receiving reasonable compensation and what that compensation is. So I thought it might be useful, just based on conversations that we've had with some of our producers, some thoughts and ideas that folks have thrown together on kind of some of the ways that we can help our clients understand how our compensation works. So I think it's a good thing to start with some things that your client probably doesn't know about how you're paid. Number one, that your upfront commission is just that. You're paid up front, but you're expected to service that contract for the life and beyond the surrender charge of that contract. Also, that the commissions that you earn, you're not paid a salary, you're not paid benefits. The commissions that you earn from a company, for most of you out there, that's all that you're paid. You're not given an office, you're not given a car, you're not given staff. And so I don't think a lot of folks understand that that compensation is all that you earn, and you're responsible for running your business based on that commission. That your commission payments pretty much, depending on the type of product that you're offering. So, 10-year indexed annuity, most of those compensations are now going to be pretty close. SPIA compensations are going to be pretty close. So again, those compensations are fairly uniform throughout the industry. Commission is paid by the insurer. And so what that means is that whereas some industries where a commission might come out of the deposit, or might come out of the sale price, or might come out of the client's pocket in some other way. In this case, the commission is paid by the company, and so if your client gives you $100,000, that's what's going to go to work in that account. If there's a bonus of 4%, then $104,000 is going to go to work in that account. So the compensation is actually paid by the company. And again, a lot of the commissions by product type are pretty similar. And not, of course, nothing that is negotiable or designed or set by you, but rather set by the company by product. So you'll find over on the other side there, let's talk about commissions, some analogies that might help our clients better understand how the commission works and how we're paid and how it might compare to some other industries, I think you might find that useful. And again, I'll make that available to all of you after the webinar here this morning. What we did here at IAMS, and this is an ongoing document, again, I want to put a disclaimer out there. It's primarily designed for internal use. It's designed for our use when we're talking to you on the phone. And we know here that you can't keep these things change daily, and so you need to keep up with it. But we thought it might be useful for you to have kind of an idea of how different companies, what forms they want back and how they're going to operate effective, today and tomorrow and the next day, and in response to this DOL ruling. So this is a nice little sheet, and again, this is something I can make available to you on the basic premise that what you will do is keep it as kind of a guideline, but what you will do also is when the time comes when you're actually putting a product in place, that you'll give us a call, give the company a call and confirm all the details and make sure we've got the right forms and everything that you need in place for you there. So this is useful information, but not to be relied on a day-to-day basis. We do urge you to check at all times and make sure you've got the right information. So what's next? January 1 is the next real date right now that's been set. And so the DOL is continuing to review based on President Trump's directive to look at the rule more closely and some of the other effects, the outside or unintended effects that the DOL rule might have had. So they're going through that process. I expect that they'll be opening it up for comments. They'll put more information out. And as it sits right now, there is the rule that's set to go into effect January 1 of 2018, which is basically the rule that they originally put out in April of 2016. But I do expect that we might see some changes along the way. So my urging is that you stay tuned, that you here at IAMS what we've been trying to do as best we can is to remove the fluff and just give you the facts around the DOL rule and make sure that you're prepared as best that we can do and get you prepared to prepare yourself, if you will, a little bit. So that's what we've tried to do here at IAMS, and so I would urge you just to kind of stay tuned along the way and let us know if you should have any questions. And with that in mind, I wanted to also mention IAMS Wealth Management. I know many of you have had interest in potentially getting a Series 65. The question has come up, do I need a 65 now in this new in the new environment in which we're working as of June 9th? The answer is no. Will I need one January 1? If things stand as they are right now, you will need a financial institution, which could mean that you'll want to become a registered rep, work for a bank, or will offer that financial institution status through the team here at IAMS as well in one way or another. But might you want to consider getting a Series 65? I would say that's probably not a bad thought. IAMS Wealth Management certainly is available to you. We work with insurance producers primarily. Assets under management is a part of their business, so we speak your lingo. We know that many folks, we've had some of our top producers just recently get appointed or get licensed as a Series 65 and join IAMS Wealth Management. So we're glad to walk you through that process and help you through that process if that's what you choose to do. If you're already Series 65 licensed and maybe not happy with your current situation, certainly give us a call. That number is 800-255-5055. I'd be glad to give you all the information that you need on that. So I'm going to turn it over right now and check what kind of questions that we've had come in. So a couple of these I see we've answered along the way. So will IAMS be my financial institution? So as from June to January, the answer is that if you're an insurance-only producer, you're going to be acting under 8424. Most likely, which means that you do not need a financial institution. If the point arrives where you do need a financial institution, it's our every intent here, either as an IMO or through our IAMS Wealth Management, to be able to act as your financial institution. Then the next question is, do I have to be securities licensed? Again, we talked about that just briefly, but I'll hit on it again. As of now, to be a fiduciary, no. You're a fiduciary if you're an insurance-only guy and you're working in the qualified funds market. If the situation should change in this regard, and we've we know that there needs to be a securities license in order to offer, for instance, indexed annuities. We would let you know that for sure, but as of now, the answer to that is no. Question. So the covering your bases form, that's again a sample form. It's not a form required by any company, actually. Even the company that made it available to us, Athene, they don't require that. That's designed for you to put in your file. That's not a required form at all. I do see we've got, let's do this. In the interest of keeping our webinar short, what I'd like you to do is write my number down, 800-255-5055, and give us a call here after the webinar. Ask for any sales director that can walk you through this. If you want to talk to me and I'm available, I would certainly love the chance to talk with you. Again, my name is Steve Murray. Dial me at 800-255-5055. I will send you out an email. In fact, let me give you my email. It's Steve, S-T-E-V-E, at IAMSINC.com. And if you will send me an email, I will be very glad to send you each and every one of those forms, because that looks to be about 95% of the questions. If so, I will be glad to send everyone on today's webinar that form. Just give me a call at 800-255-5055 or shoot me an email at steve@iamsinc.com. And I'll also include with those forms a recording of this webinar as well. So thank you all for joining us this morning. Hopefully that was brief and informative for you. Look forward to chatting with you. That's our goal here at IAMS, is to be a resource for you and to help you grow your business. When you grow your business, that's how we become successful here. And so that is always our goal. Thank you for your time this morning, and look forward to helping you along the way. Good luck on your production, and give us a call at 800-255-5055. Thank you.